Okay. All right. So uh let's dive into this. Today's session, we are going to dive into our game plan, which is going to be sizing into trades. Okay. This is a really important session because how you size into trades, how you size into trade, you guys are crazy. How you size into trades is absolutely going to determine if you are going to not your it's not going to change whether you win or lose, but it's going to change how much you win or lose. That's what it is. So yeah, that's absolutely not going to make the recording, guys. That's not going to make the recording. And what I'll do is we are recording right now. So everything we do for now is recorded. There's just going to be one part towards the end that's not recorded. Okay. So we should be good. Okay. So today's session, we're going to talk about three things. We are going to talk about we are going to talk about scaling into trades. We're going to talk about how you actually do it, right? Are you just going in one order? Are you doing multiple orders? Slippage. We're going to talk a little about slippage today as well because slippage is a serious problem eventually. And we're also going to talk about guys. There's not a $7 million account. Okay, I was not a seven. It was a few of those, but not seven. Right? If you want seven, go talk to Ari. Or go talk to Ari or Ari's got a few seveners, not me. But we got a few of them. That's not what matters. I didn't mean to. I honestly did not mean to do that. I hopefully it's not okay. You're fine. So it's important, right? So today's session we'll talk about slippage, we're talking scaling in. We're also going to talk about how you determine what your size should be in that trade. Okay, that's what today's session is going to be about. So let's dive right into it. I don't want to waste time because we have only an hour. Let's jump into it. So how you determine your size in a trade is a function of simply this. This is the most important function to understand as a trader. Your size is determined by very simply the probability of you winning on a trade, your risk on that trade, and that's it. That's really what it is, right? We often we often confuse things and make things more complicated, but that is really just what it is. And you can go a step further. You could talk about how, days to expiration, i.e., if you're trading 0 day expiration, you're trading 0 days of smaller size. You can also go even further and say, well, the quality of the trade matters as well. But really, in essence, it all boils down to what is the probability of you winning that trade and what is your risk? That's what it is. And so if you think of it like this, if you have a particular strategy you're running, let's just say you trade the break and retest strategy. Okay, that's what I do. I do this day in and day out. It's only system I really trade, bounce reject and break and retest. If I trade a 75% win rate, okay, and overall my stats say that regardless of what I'm doing, it's a 75% win rate. On if I am going from one trade to the next trade, and the one trade my first trade of the session is a 20-cent risk, and my second trade of the session is a $1 risk, right? So the same exact trade, the same thing that I'm doing every single day, day in and day out. Do I size the same on those setups? If it's a Monday and I'm trading Friday expiration contracts, am I going into that session trading the same size? And the answer is no, I'm not. Why? Because in a trade where I have 20-cent risk, I can size more in that trade than I do a trade with $1 risk. It's a very simple approach. When you are getting into a trade and determining what your size should be, your first thought should be, how much am I risking at this exact moment? And the part of today's session that's really important for what we're discussing today is not going to be just presentations like this. It's going to be looking at actual charts. And it's going to be studying trades in this week. And in particular, we'll go over Apple trade today, which was not really it was not really an amazing trade, but it did work, right? It did work. And the sizing of this trade was incredibly important. Because if you look at this trade here today, right, and you look at where we got filled on this chart, so we had a level today on this Friday session around what was it around this around 280 today on Apple chart, and my risk as soon as I got in this trade was determined to be what it was this level right here. I'll draw it out so we all see it properly. In fact, what we'll do here is a reset everything here. And we're going to just go back into the basics and just study this chart from two lines. One line being your entry, which was 280, And the second line being your stop loss, which was 269.70. That's your stop loss. And if you're getting in the trade somewhere over, let's just say your levels here, let's say you got in somewhere over here at 280.1, right? Let's just say you got filled around 280.1. And what I'll do here is I'll make this a dotted line chart. Well, if I'm getting in this trade at the dotted line, I am risking the whole move down to 279.70, in which case I'm risking approximately 40 cents here. If I'm risking 40 cents, on and in a trade like this, 40 cents is what? So 40 cents is not even a full delta, right? So it's just 40 cents. On a contract that expires next week, on a next week expiration contract, that means that by 40 cents, if it goes down 40 cents, I'm gonna lose, give or because it's 1 week out expiration, I'm gonna lose, give or take, about 10%. That's my risk. And if you want a mathematical way to determine how much you're going to be losing. If you want to have, like, if you're not someone that has been trading for a long time and you kind of want to have an actual formula to calculate this, well, all you're going to do is you're going to look at the delta value, right? The delta value is determines how much a contract is going to move depending on a $1 move of the underlying equity. So 40 cents is our risk here. But let's just round this risk up to 50 cents for a second. Let's just say our risk was 50 cents. That means that 50 cents is one half delta. Delta is a dollar. So when people say delta, delta just means $1. If I am risking one half delta, all I'm going to be doing is going to the option chain on Thinkorswim, on Robinhood, whatever platform I'm using, and it's going to say, I'm taking a cough drop, by the way, guys. I'm not popping pills on the Zoom this morning or this afternoon. But if I'm risking one half delta, all I'm doing is I am going to see what the delta is. And the delta it may say something like this. You may go to a delta on Apple, and the delta it'll say one. And what does that mean? That means that every time the stock moves $1 up or $1 down, you make $100 or you lose $100. Okay. So that's what the delta means. If the delta said 2.5, okay, that means that every time the stock goes up a dollar, your contract moves $250, either up or down, depending on if it's with you or against you. Okay. So that's what the delta value means. And if my risk is one half delta, 50 cents, one half delta, then all I'm doing is multiplying my delta value, my risk by the delta value. So zero point 0.5 multiplied by, in this case, $1 means I'm risking 50 bucks per contract. Again, I am just doing my risk, my dollar amount risk multiplied by the delta value. Let's do another case example because I feel like that was a very bad example. If the delta value was, let's just say the delta value was $3. I'm already coughing. I'm already yelling. I'm yelling, I'm coughing. If my delta value was $3 and my risk was 75 cents, then what I'm doing here is I'm multiplying my delta value, my risk by my delta value. In which case, what I can do is pull up a handy dandy calculator, right? And I'm going to do this. Ready for this? Can I bring it over? I can't bring it over. It won't let me bring it over. I was going to open it up and it was be cool and it was be cinematic, but you can see here that 0.75 by 3 is what? Is 225. So $225 is my risk here. And so if I know that my risk is $225 per contract on a particular position, and I know that my maximum risk as a trader is a certain value, let's just say it's $1,000, then all I'll be doing is taking 4 contracts. That's it, right? It's a very simple and effective approach to determine what your size should be. Again, what we're doing here is we're determining our maximum risk to say our size should be this amount. And if you know that you as a trader can stomach $1,000 loss, and you know that by the time you get stopped out on this trade, by the time it breaks your red line over here, that you're going to be down $225, then all you're going to do is divide this number by this number, and that's going to say how many contracts you should take, which in this case is 4 contracts, give or take. That's what it is. That's all it is. And again, you don't need to do the formula I just did to determine this. Let's not overcomplicate trading. Trading on its own is already complicated. I don't want you guys to do that, but I want you to understand this just this once, and you never have to do this. In fact, me as a trader, I never will go in and I will never go in and look at the delta value day in and day out. I'm not going to do it because I already know that the delta value on a Tesla, I already know what the delta value on Tesla is, what Apple is, what Meta is, what Nvidia is. I know what it's going to be. Now, if you threw me into a room and said, Brett, trade Robinhood today, I wouldn't know how much those contracts move. And I wouldn't be able to trade it as effectively because, again, I have to look at the delta value and see what my risking in that trade, what my risk is on that trade. So, again, people oftentimes ask us, why do we only trade certain tickers? For example, why do we only trade NVIDIA, Amazon, Apple, Tesla, Meta, Microsoft? It's not just liquidity. It's also because we know what we're risking on these trades. Okay, so let's dive into our presentation. Okay, so we know that again, it's obviously a metric of your expiration date, but it's also a metric of the quality of the trade you're in. So this is important because I am assuming something very important here. I'm assuming that we all trade the same strategy day in and day out. Now, I see you guys all the time, and I'm going to call you guys out. How many of you guys answer this honestly, right? How many of you guys just trade any signal that goes out in the Discord? How many of you guys do that? How many of you guys you see Joe Schmo, Brett signals this, Rav signals that, Mike signals this, Aristotle signals that? How many of you guys just blindly enter it? How many of you guys actually do this? You be honest with you. Just be honest. Yeah. Um, you're gonna realize this day in and day out. It's it's not effective because you need to stick with one system. I know many of you guys are good, right? But you need to stick with one strategy or someone that trades like your system or like your strategy. For example, you may find that Mike trades a particular way that you love, and that should be the person you follow, or Rav, or Aristotle, or any of us, right? But again, you have to find one or two people that match your system. Because if you trade one person that trades a 75% win rate with an average stop of 12%, and another person with a 90% win rate with a stop loss of 60%, it doesn't matter. You're going to lose in the long run because you're sizing the same and not dynamically changing. You're not changing what your size is going from trade to trade. It's very important. Okay. If you guys see me muting my mic, it's because I'm coughing. That's what I'm doing. When I tap over here, I'm trying to avoid screaming into the mic when I cough. Okay. So next slide. We'll go to this first. This is what I'm trying to say here. As traders, you need to be studying other profitable traders and seeing what they're doing and what they like. This is what I did in the chat. I learned from Honey Drip. I learned from the people around me. I learned from Aristotle. I learned from Mike. I learned from Rav. And I picked up certain things that they did that I liked. And I picked up certain things that I didn't like about them either, right? And I changed it and tweaked it such that I trade my own strategy. My strategy is no different than theirs. It's the same thing. We all trade levels. We all trade levels and price action. It's the same thing, nothing crazy, right? But I've built it over time and refined my risk to better suit my portfolio. And you guys on your own need to be doing the same thing. It doesn't matter. You probably are thinking, well, I should follow Brett now. No, no, you can study what I'm doing, you can see what I'm doing, and you can learn from me. You can probably follow me for a few months, but the end goal for all of you guys, there's 600 people here, almost 700 people here in the Zoom this afternoon on Friday. Your goal in the end should be you should be a self-sufficient trader, right? You should not have to follow, you should not be following anybody else in 6 months. Your goal should be, I want to learn from them. I want to study what they're doing, but you should try to recreate it because we are not special, right? We are just trading levels and price action. Okay. And eventually you're going to get to the point where you get to step four. And step four is where you refine your system. And I am doing this every single day. Okay. Every single day I take a trade, I go in and I review the trades that I'm taking and I review everything about that trade. Now, granted, there are some times where I'm lazy and I don't do it. But most weeks, at least one day per week, I will go through and review all my trades. I will look at the trade, for example, like Apple today. And most people will look at the trade like Apple today. And I'll tell you in this trade, right? I had I have a lot of drawings here. I'll just get rid of this. I had I had an $11,000 position here on Apple. Okay, so let's just write this out. Let's actually just as a case example. I had an $11,000 position here on Apple, and we'll use this as a case example because again, this is important to what we're doing today as well. My size was determined by my confidence because I like this trade. It was a break under my lows and a reclaim. This to me is again one of my top setups. We were developing a hold over 280. I thought that eventually we could break the 280, this 281 level, which is over here. And if we did, I'd see a beautiful upside move. Okay. But in a trade like this, where my $11,000 position came in, I was risking one half delta. And we know what that is already. Basically means I'm risking 50 cents. So 50 cents, this trade was about 10%. And so my risk in this trade was approximately $1,000, right? $1,000 to $1,100 risk here on this trade. That was my risk on this particular position, right? My potential reward on this type of trade was what, right? It was a move back into 281 and potentially beyond. And so my reward in this trade was at least a thousand, but possibly more than that. Every trade that you are taking, you need to be studying it the exact same way I just did this. The quality of the trade, was it an A plus setup? Was it a setup that you normally take? And you also are studying to see what your risk was versus what did you actually realize in this trade. Now, my realized profit in this trade was $900. So I made 900 in this trade. Does that mean this was a particularly bad trade? No, it doesn't. It just means that it tapped my 1R, which is my basically, do you guys know what 1R means? I'm going to explain it in a second, but do you guys know? I'm curious if you guys know what this means. Do you guys know what 1R means? One risk, exactly. So many of you guys know it, some don't know it, but I'll explain it. So just like we're talking about position sizing being important and scaling in is important, right? So we know we already kind of know how to size in trades. We size in trades based upon what our risk is. Well, how do you once you're in the trade, how do you actually trim? How do you actually scale out of it, right? So if I know my size of this trade is 11,000, so in that case I'm probably buying 50 contract or 40 contract, right? Well, you can't just go in and take profit at 5% and think it's a good trade because it's not a good trade, right? And a trade like this, you need to always be looking at what your average risk is. And so you guys may not think this is part of today's session, but it is. Scaling in is just as important as scaling out, okay? And scaling out is just as important as scaling in. So in this case, if my risk was 50 cents to the downside, my first trim cannot be until I at least make one R, R being risk. Therefore, I can't start trimming this until I see at least 50 cent in my favor. And so if my fill is here on the calls and my risk is here, my reward must be at least an equal magnitude of my risk, which in this case is there, right? So the high of that candle will be where I get first trim, right? So that's what it is. And so when you're studying these trades, you are reviewing how you actually how you actually perform in that setup. Okay. Did it go 50%? It didn't go 50%, but did you trade it well? And in this case, my execution on Apple today was A tier because I followed my game plan. I got stopped out in runners, but it did go 10%, 12%, 30%, took some trims, raise my stop. And who's to know that this particular setup wasn't going to go break 281, rip up higher, and continue? It doesn't matter what strategy you trade or who you trade with or what chat you're in. It does not matter. This could have happened. This was a probability today, but it didn't happen. All we control as traders, for the 700 people here in the Zoom chat this afternoon, the only control we have in our trade is our entry and our stop loss. How far a particular trade goes, it's beyond us. We don't really know how far it's going to go. Nobody can tell you how far it's going to go. Therefore, a trade that meets 1R is a good trade. Anything beyond that is a gift, and you should take it as a gift. Okay? So let's move on. Journaling trades. This is important. You don't need to use a software if you don't want to. You don't need to, right? You can do it on pen and paper. But what I just did right here in front of you guys, the last 5 minutes, doing that, reviewing my entry and my exits is the only thing you have to do. And you could literally just pull up a pen and paper and start drawing it out. but you have to be doing it. And even if you're taking a signal, let's just say you take a signal with Rav, okay? And Rav took long today on AMD, right? So if you go to AMD chart, and he took today what I would consider to be a break and retest, right? You had a level of demand here at 219, a breakout, a pullback long, a retest, an upside move. Now, granted, it was a liquidity grab, right? So it did technically liquidity grab under 219 first, but it was a break and retest. And so when you're journaling this trade, you're going to mark the two trades you to take in, right? You're going to mark the first trade you probably got stopped out on or a small loss. But then you're also going to mark the second trade that you re-entered, and you're going to mark exactly how you executed it, both the entries and the exits. And you're going to study exactly how you did this. Did you go in here, enter long, then TP full into 220? Or did you perhaps try to enter here to 218 and use EMAs to hold it for a longer and squeeze more value out of those trades? Okay. Wow, my voice is going crazy. So that's what you're doing. You're journaling every single trade you take, even if it's a signal. It doesn't matter who's signaling it. You're journaling it every single time, day in and day out. Okay. Brandon just asked, how can you convert your stop price low to an option contract low? Use the delta value. That's the only way to do it, right? And again, it's an estimate. It's not going to confirm it 100%, but within 3 or 4%, it'll be correct. Okay. So doesn't matter if you're trading a small account or a large account. This should be your plan, your trade plan. You need to find the short-term and long-term goal of the trade. Every trade you are doing, you have to have a goal for it, right? My goal on Apple today was not simply just this. It was not simply, I'll show you this. My goal on Apple was not just to get a small move into 281, right? Larger time frames are going to be your best friend. So if I have a level of demand here, 280, and I see that we have what's happening here is a beautiful breakout and a pullback retest to my demand zone down below for an upside move. My longer term goal on Apple, my longer term goal here in Apple is back into these highs over here, right? That's my long term goal. This is charting 101. I have a big breakout move. I have demand consolidating below, demand consolidating below, demand consolidating below. My ultimate target here is back at 288. That's a far-fetched goal. It's very, very, very far away. But in the short term, however, I can have smaller profit targets. And what that's going to look like is it's going to say this. Well, if I'm entering long right here, right, at 280, right? Let's just say I'm entering long right now on Apple. Well, my short-term profit target is going to be back in these highs right here, right? That's the previous high of day. And so what we're doing here is we're combining our short-term goals and our long-term goals in a trade. And the reason why we're doing this is because I don't know how far it's going to go. I don't know if Apple is going to push into my first target here, my first short-term target here, and if it's going to just reject lower, that's it. Then you walk away for a small gain today. I don't know if it's going to break and hold above it, and you see an EMA day where it just EMAs all the way into the moon. Nobody knows how far it's going to go. So no matter what you're doing on a small account or a large account, you are charting precisely how far you think it's going to go, both in the short term and the long term. Because again, you're creating opportunity and you're marking out where you think that is going to be. Okay. And you're creating a daily routine, obviously, right? So have a daily routine when you do this. If you start trading at 9:30 in the morning, maybe you should be preparing it as early as 9 o'clock or even as early as 8:30, right? For me, my day starts at 7 o'clock. For you, it could start at 7:30, at 8 o'clock, at 8:45. But again, have a routine and do it every single day. Have a method to research stock. Obviously, we already know this. We're using TradingView. We're charting this. Come to pre-markets. We do this every single day as well. And have a strategy that works in different market conditions. For me, my strategy, the only strategy I ever trade is the break and retest and the bounce retest strategy. It's all I do, nothing else. Have an effective stop loss strategy on any account size. It doesn't matter. It's the same thing day in and day out. Always have an effective stop loss strategy. And again, your stop loss strategy is based upon a level, not based upon a percent value. Generally, though, you don't want to be losing beyond. I mean, for me, my rule of thumb is my average gain is around 20%. Therefore, my stop should never be beyond 20%. And if I do take a stop that's beyond 20%, it's a mistake, right? You may find I don't know why I'm looking at the chat over here. So if you see me staring over here, I'm reading the chat right now. If you find that your average win is 30%, okay, then your stop loss should be no longer than no greater than 30%, right? So your stops, your maximum stop loss should be your average win. That's just what it is for me. My maximum stop loss percent wise is my average win. Now again, you should base upon it off of levels though. Levels are the basis of everything. But if you want to go up percentages and want to have a general guideline, that's what it really should be. Okay. Moving on. Have a method to document trades to back into strategy. Obviously, now we're just getting into generic stuff, which you guys all know, and I don't like doing that. Let's move on. Let's go over an actual case example today about position sizing in trades. Let's just say you have a $3,000 account, okay? And you have a 10% average size per trade. So $3,000 account, 10% average size per trade. That means that your average trade size is going to be $300. That also means that you're taking on average 1 to 3 trades per day. And for that reason, your profit goal is $100. And if you continue doing this for multiple months, say 2 months with a 70% win rate, this account, which started at $3,000, will go to $9,000. And this becomes your cushion. The cushion is everything developed beyond your initial balance, beyond your initial principal balance. Okay. So this rule of thumb is what I follow even to this day. If I trade on a 100K account, my average size, I mean, this is the size I trade in my day trading account is 100K. That's what I size in most trading sessions. I'm trading on a 100K account, even sometimes less than that. And so what that means for me is I'm sizing max size 10%. 10% of my 100K is $10,000, right? And so my handwriting is bad here, but you guys understand what I'm saying here, okay? So I'm sizing 10K on almost every trade. But this is again is going to change based upon what? You guys know it already. My risk. If my risk is if my risk is only $300, right, on this particular setup, then why can't I boost my size to say 15K, even upwards of 18K, right? Why couldn't I do that? I could do that in theory, right? Because my risk is so tight. Again, you have to follow your risk, but you can play with this number plus or minus depending on how much you are risking on a trade. There are some times where I may be up 5K in the day, 6K in the day. And the next thing you know, I'm in a 100 contract position on NVIDIA 3 day out expiration. And the reason why is because I am probably risking very little on that next trade. I'm probably risking $500, $600. And the reality is, I may get stopped very quickly. I may get stopped instantly, right? But I will do it. And some traders will say, Brett, you can't do that. Brett, that's a bad idea. You need to have the same size every single time. You need to be sizing 10K every trade. No, screw you. I don't care. This is what's worked for me for so long. And I think of it not so much, this is a general benchmark, a guideline. But the most important thing is to keep your risk always the same, not your size. It's very important. Think of it like this. Would you trade 0 day expiration contracts the same size as you would 2 week out, 3 week out expiration contracts? No, you wouldn't, right? You would probably have more size in the 2, 3 week out expiration as you would a 0 day expiration. Why? Because your risk on 0 days is a lot greater. Okay. That's what it is. Okay. So let's move on. Let's move on. Let's move on. Let's move on. Advice, yada, yada, yada. Limit yourself to 1 or 2 trades per day. Anything beyond this should be considered lotto size or high risk. We know this already, right? Never compromise your position size by going too heavy, right? Always define your risk on every trade. If you have red days, adjust your size, but don't be hesitant to take that trade. You guys, actually, a good example was Mike today, right? Mike lost 1, 2. He lost two small losses on the first 2 trades. He came back in the third trade with a bat in his hand and he slammed it, right? He slammed it with a bat. Why? Because it's okay to take 2 losses in a row. Now, 3 losses in a row, that's where I notice I go on tilt. You guys are probably similar to me, right? I assume you guys are probably the same way or similar. 2 losses in a row is okay. 3 losses in a row, now I'm on tilt. Now I need to cut myself off. The reason why is if you actually look at the chart today, right? Look at the ES chart today. Look at the ES 6900 level today, right? All we did was we consolidated into resistance, right? It was never really wrong. It just you never really wrong about the fact you were getting stopped out, right? If you were stopped out of short here, but it was never really a wrong setup. It's just the market kept grinding and grinded you out of your trade. It was not the wrong idea. It was just keeping tight risk management is what resulted in you getting stopped out. So taking three trades on this, it is okay. Now, if you take a fourth trade or a fifth trade, that, in my opinion, is where I see myself going against logic. And I now am just trading for the sake of trading, and I'm probably losing a lot of money that session. So I cut myself after three losses. I'm done for the session. And I'm going into the next session, probably one half size, just to build back my confidence. But two losses in a row is okay. Three, typically not good. Okay. So that's just a case example. But again, that's what I do. And now you may find for yourself, that's something that I say for myself, that for me, I do three. You may find that for you, it's two. And that is fine. Right. But you could be four. It could be four for you. You need to find what works for you. I am just saying what I've developed over time and what I've realized about myself. And this is what I'm realizing about myself. And this is what I follow. Again, as you study yourself in your own trading, you're gonna learn more about it. Okay. So that concludes my presentation here. What I want to do is I'm gonna stop recording now, and we're gonna start talking about some important stuff here. So we're gonna recording and we're going to pretend that didn't happen. Okay, so let's go back into this. I'm here now. You guys can answer questions. So I'm going to answer questions. You guys are going to ask questions. Jeff, do you stop when it breaks your level immediately, or do you wait for it to close above, below your stop? Jeff, usually when my hard stop is defined, if it breaks my level, I stop immediately. So sometimes I give it like 10 cent, 15 cent the most, but if it breaks it, I'm out, right? If it breaks it, 10 cent, 15 cent, I'm out of it. Alexander, what kind of trade is this? This is just a break and retest. This is just a break, a retest, and it kind of broke above it and then fell below, trap liquidity above, or trapped all the buyers above, sell below. Similar to what you guys did. You guys trade with Rav today in AMD? Look at what Rav did in AMD today, right? Go to this chart here in AMD, and you're gonna see it, right? It was basically the same thing but the opposite, right? Broke above, failed below, reclaim, upside move, right? That's what the trade was today at AMD. Same thing. Basically, break and retest, but traps them first. Then it goes. So when it break a level or close past below, so it's when it breaks the level, Marco. When it breaks the level, Marco is the correct answer. I caught AMD in full size was nice. That's awesome. I'm glad you did. That was a really good trade. How did you can you look at Costco? Yes, let me close this out actually. See it that's what's happening when if it like is opening it's like opens things in my thing here. Okay. Uh can you go over Costco? Yeah, I'll look at Costco. Let's go over that. Not much happening here in Costco. Uh the way you trade confuses me a little bit. If you speak in terms of Forex trading and wondering if you tried that and didn't like it, why options? Uh Ash, out of much love, I will not do that. I'm not going to teach what I do in terms of Forex. I'm just going to do what I do. If it makes sense, it makes sense. If it doesn't, I tried my best. I really did. Um, that's the thing is it. I would definitely recommend watching the recording of this as well. Do you set your limit? Do you set your limit? Do you set your stop limit? No, I follow a level, right? So if my stop is like, so let's just say my stop on Apple is here, right? As soon as it breaks it here, I'm out. Excuse me. How do you determine your stop for starters if you won't be able to add? How do you determine your stop for starters you won't be able to add? Uh, Rajan, that's a really good question, by the way. I would stop out on the starters as soon as it breaks my anticipated stop. Usually, okay, once I'm full size in a trade, I'll have a little bit more leniency with my position. So let me repeat that. If I'm in starters, there's leniency. If I'm in full size, there's no leniency. So you may see me sometimes holding a little bit beyond my stop loss if I'm in starter size. But if I'm in full size in a trade, I never hold beyond my stop loss. And there are some traders who would say you should never hold beyond your stop. And while I do agree with you, sometimes when I'm just in a partial size or half size, I'm okay giving it a few seconds, giving it a few cents underneath my level to determine if I'm really going to get stopped a lot or not, right? Cayman is asking, absolutely spamming. Cayman, please don't do that. You're really spamming. I'll read it. I'll read it the first time. How do you know when to call? How do you know when to call after day trading? Catching a 30% trade, do you stop or keep going? What do you do? You go at 9:35? Do you call it? So usually after two or three trades, I tend to call it. So if I get one good 30% trade, I will. I if I get one good 30% trade, sometimes. Okay, this is a bad answer, but if I'm up $1,000 in a session, okay, it's a judgment call. It's a judgment call for me. It's a judgment call for you, right? In most cases, I'm probably just gonna call it because I am done. I met my goal. I'm gonna walk away. There are some times where I just feel like I have more in me, right? And I want to do it. And I will go and I'll risk one half my profit on the next trade. If I lose my next trade and I give up half my profit, I'm done for the session. It's a bad answer. It's not a professional answer, but I'm just being honest with you. It's a judgment call in that moment. It is a judgment call. So I wish there was a way I could tell you there's like a mathematical formula, but there's not. Sometimes I'm feeling more spiffy. I want to get more trades, and other times I'm done with 30% and I walk away and that's it. It's a pure judgment call, and I'm not gonna like BS you on what I do. Now, oftentimes it could be sporadic. Uh, how do you execute trades so quickly? Can it be done on Robinhood? Yeah, I mean that's the thing is Robinhood is not really a good platform for that. I think that you'll be better with like a Thinkorswim or Webull, right? Even E-Trade. Like, E-Trade has a good platform. Robinhood is Interactive Brokers is also good, Pierre. I noticed that sometimes you add even after a trade, you're in is in the green. What makes you do that instead of trimming? Jay, really good question, by the way. That's a really good question. There are some times where I will add into a trade at my trail stop. So if I'm if I am green on a trade, let's just say I am in a trade that's trending in my favor, like this, right? And I get in somewhere over here. Well, in theory, my stop loss is here now, right? Whatever that recent swing low, my stop loss is there now. I sometimes will add to it only at my trail stop and have a tight stop beneath it for it to continue in my favor, right? So I'm technically green in this trade right now, probably 10, 15%. So there are times where I add to trades that I'm already green on, but I will only do it. That's called, by the way, it's called recycling contracts. That's called contract recycling. But I will only do this when I am at my trail stop and I'm not going to give up much of my gains. I.e., if I'm up 2 grand in this trade, right, I'll add back in 30% of my initial size here to get more exposure in the trade, and I'll have my stop at the trail. Meaning, I will get back some gains here, right? But if in the case where it does continue working in my favor and trending in my favor, I will make more money on that trade. Okay, so again, this is a dangerous approach, though. This is a very dangerous approach. This is something that like I would never signal this ever because there are times where I give back profit, and you want to hear about it. I'll show you something, right? Uh, if you guys remember from yesterday's session, Thursday, I you guys came out green in this trade. I came out green too, but I gave up a lot of my gains. So I had a level around, what was it? What did we do yesterday? Was it Thursday the 4th? Was it here? Did we short the video here? Where did we short the video? No, no, it was here. Oh, it was here. Okay, it was this trade. It was on Wednesday session. We had a level at 180. Okay. And we got in on this candle right here is where I developed a lot of size. And I added there. I mean, we all spoke about adding it here. And so we got a big downside move into our TP, and I was super happy, and everyone's happy. And then my dumbass, right, goes in and adds more size at my trail stop because that's what I do. I was up 3K on this trade. I was up actually very nice in this trade. I then added back on this candle right over there. And then on this candle right here, which broke above it even for just a second, just like that, I gave up almost 90% of my gains in this trade and walked away with only like a $500 gain on NVIDIA. That's all I made on NVIDIA on Wednesday session. In fact, on Wednesday, I was net negative on NVIDIA overall. I was, right? And so the system I just showed you of getting back in at trail stops, it's effective, right? But there's going to be cases where it's ineffective and you just gave back some of your gains. So again, for new traders, developing traders, stay away from that strategy. It's not, it can bite you in the ass sometimes. Okay. What's the most trades you're in at once at one time? Two. Never more than two. Never more than two. Will you give a class on swing trading and long term? I think Mike is going to do that actually. Mike is doing a class on swing trading. Mike is a much better swing trader than I am, so he's going to do a class on swing trading for us. What's the smallest amount to fund a small account? 2,000, 3,000 would be good. I swing iPhone. I do swing, but I do like equity. So I'll build like equity trades, and I'll build size and equity positions, and I'll swing the contract or swing the equity shares, and I'll do it like with like 3 week out, 4 week out type deals. So like for example, I have an equity swing on SoFi, right? SoFi is an equity swing that I'm in currently. You guys are all in the chat, right? So you guys know this, but I longed it over here, right? And so I'll sit in this trade for 2 weeks, 3 weeks, right? And I'm looking for it to, and I'll trade this on a large size. I'll trade this on like 50K or 60K or even more than that. And the reason why I'll do that is because even though it may seem like a lot of money, it's not that much money because it's the same risk. If I was risking 10 contracts, I'm risking the same on 75K. So I'll just go in larger size on shares and I'll look for an equity swing for a target back in eyes. That's it. Same deal with Amazon, right? We do the same thing. And you guys can do it, right? Like if you guys want to trade options on the equity trades that I post, I, by all means, right? You can do it. Just make sure you have timed expiration. Rodney, absolutely. I use VWAP always. VWAP is really important. Carlitos, do you add at your stop loss? No, actually, I don't tend to do that. I tend to not add at my stops. I tend to only add at my trail stops. Do you think a trader once profitable at 10K account can be trading for a living? What is an amount? Brandon, I would recommend having like 25 to 30K at a bare minimum. 25 to 30K would be a good bare minimum to get you to the point of like full, if you want to be full time, if you want to be full time, grow the 10K and the 30K. You can do it, right? If you really want to be full time, grow the 10K and the 30K. And then once you're at 30K, then you can start talking about, maybe going full time or even converting to part time, right? To trading. What mistakes you made in your beginning? I made a lot of mistakes. I made a lot of mistakes. All right, guys, I'm gonna call it here because I am losing my voice and I sound awful. So let's call it. Thank you all for joining in. If you guys enjoyed today's session, throw in the testimonials. I don't know, light us up a little bit. We'd love to see it. I'll post a recording. So for those that missed this, the recording is gonna be posted. Not the whole thing, you guys already know. But there's gonna be the bulk of it is gonna be is posted for you guys. So thank you all for joining in, and we're gonna do more of these. Seriously, the more we do, the more you guys learn, the easier it is for us to trade. So I'm excited to keep doing more of these. Keep me accountable too. I'll keep myself accountable, but you guys, I said it here. I'm going to do at least one per quarter, at least one, and probably two per quarter. So we're doing 1 to 2 per quarter starting now. So I'll do another one in January, and I think Mike is going to do one next week, and Rav is doing one as well. So let's keep doing this. If it was helpful, let me know in the Discord chat, and I'll see you guys all on Monday. Have a nice weekend, guys. Bye, everybody.